Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest for the first half hour is Carter Malloy. He is the founder and CEO of AcreTrader, which is a way for the average investor to invest in farmland. Welcome to the show, Carter.
Thanks for having me.
Just give us a brief background about you and then how you got to create this way for people to invest in farmland.
I grew up here in Arkansas, spent my childhood in a farming family, ultimately went to school, did science and physics in school, and then spent about a dozen years doing professional equity investing. In the background, I bought and sold farmland with my dad and had a really good experience, and had a neighbor. I was living in San Francisco at the time, and had a neighbor ask me, "Hey, I want to invest with you." And went, "Well, surely there's something online to go invest in farmland. It's it's $3 trillion of stuff, and it's pretty high performing asset with low volatility. Go online, there's nothing there." And that was the genesis of AcreTrader, is just to make this unique and non-correlated asset available to everyone else that's not a farmer.
Very good. So let's just kind of start with the overall reason. Why would people want to invest in farmland? At the current time, we have such turmoil in the world. You've got coronavirus, a lot of people dying. Just kind of put it in the current context a bit.
Yeah, so the interesting thing about farmland is it's been a non-correlated asset for all the performance history that we can see. So it just is not influenced meaningfully by the movements in things like the stock market. And so as a result of that, plus some great historical returns, it's put up 11 to 12% average returns for almost 30 years with lower volatility, so lower swings in the price than most other asset classes. And so it's just a very unique standalone asset that doesn't tend to be influenced dramatically by outside factors. Very simply, we have a little amount of farmland in the U.S., and it's shrinking every minute by about 3 acres, and we have more mouths to feed every day. So you have this really favorable long-term supply and demand setup.
Although commodity prices are pretty low. I mean, when you have the economy contracting like this, it means, you're seeing what happened to oil prices and other commodity prices have been falling. Wouldn't that affect the returns you'd get on farmland?
It could. So we've seen low commodity prices, things like soybeans and corn, for 5 or 6 years. So this is nothing new. It's been sort of bad out there for farmers for a long time. For us as the landowners, that's their business. Our business is owning and renting the land, and so we have fairly stable rent prices and have for some time here in the U.S. So to be clear, in owning farmland, you make money 2 ways: one, through the appreciation of the asset over time, and 2, from the rent that the farmer is paying you. So we are not actually out driving tractors and selling corn.
So let's talk about the first part, the price of farmland. So if commodity prices are going to stay low, why would farmland appreciate from where we are today into the future?
Yeah, I think over the long term, you see commodity price inflation, and we are long-term investors. And so, we've had depressed commodity prices again for 4, 5, 6 years here now, and farmland has continued to appreciate, again, because of that limited supply of it that we have, limited and shrinking supply that we have here in the U.S. And so, as a result of that, you continue to see slow and steady March depreciation. And again, it's not a get-rich-quick scheme. You don't tend to make a ton of money or lose a ton of money. It's served as a really great, at a baseline, as a really great wealth preservation asset. But in reality, it's actually put up some pretty great returns.
And then on the rent side, what has been the trend in rents? Have rents been rising? And is that considered a stable source? Again, if the farmers are having trouble because of low commodity prices, some of them may default, I suppose.
Yeah, it's interesting. Our default rates and vacancy rates, there's not a lot of great data in the industry, but they tend to be really, really low because there's farmers want to grow their business. It's an economies of scale business, just like anything else. You already own a tractor and have the labor, and so having a neighboring parcel of land to rent to grow your business can help with your margin profile over time. And so because of that continued demand from the farm operations that are growing out there, we've seen stable rents here over the last 4 or 5 years, and in some places some decreases, in other places some great increases.
So from an investor's point of view, let's talk about AcreTrader. You're investing in an individual property, or you're doing a pool of many properties?
It is individual properties. So very simply, we establish an LLC. We call it AcreTrader 125 LLC. That LLC owns the property and owns the title, and the investors own that LLC. So you come on the website. It's just securitization, just like you see in an IPO or anything like that. And it's very simple to come on the website. In just a matter of minutes, you can buy a piece of that LLC for as little as $10,000, depending on where the farm is and what type of farm.
And then you're sharing that with other investors in that LLC?
That's correct. There's
what would be a typical value of a piece of farmland, and how many investors would be in it?
It varies greatly. In the Mississippi Delta, where we are here, it's $3,000 or $5,000 an acre. In the Midwest, where we work a lot as well, that can be $5,000 to $10,000 an acre or even greater. And on the West Coast, if you're dealing with, let's say, almonds or trees or citrus and fruit, the price break can get up into $20,000, $30,000, $40,000 an acre. We don't do wine grapes, but some land in Napa will trade as much as $500,000 an acre.
Wow. Okay. So what is the liquidity if people wanted to sell their holdings on this LLC? Is there a secondary market, or what kind of liquidity would be available?
What we're seeking is long-term investing and long-term investors. That's the whole idea of compounding capital is not to trade in and out. So we are not for day traders. Typical duration of our LLCs are 3 to 5 or 5 to 10 years. Regarding liquidity, there's a minimum 1-year regulatory lockup on those shares. So if you purchase shares in a farm, you do have to own them for a minimum of 1 year. After which you're free to sell them, so you can go sell to friends or family or sell them through another online exchange, and we'll help facilitate that on our end. And then we're also working on our own marketplace, so you can actually do all of that inside of the AcreTrader website. And
can you do this inside an IRA as well?
A self-directed IRA, you can. A solo 401k and SD IRAs, we work with both, and we have quite a few investors that use self-directed IRAs on our site.
So can you reinvest the rent that you're getting back into other properties?
You can. There's no forced mechanism, so there's not a switch to turn it on and it automatically goes back in, but you absolutely can. We pay out the cash distributions each year. You have an AcreTrader wallet on the site where you can link your bank account and drag and drop funds either way. And so we'll put that rent, your cash distributions, into your wallet when those are paid out.
You're getting paid monthly, not annually, though. Is that right?
Yeah, this is a fascinating component of Farmland. We usually get rent checks once or twice a year. More often than not, that cash rent comes in March, so before the farmer even plants. So when we were talking about default rates, we're not out chasing, it's unlike commercial real estate, we're not out chasing monthly rent checks. There's low turnover and very low vacancy within the industry. And so it's typically one or two checks a year.
So what happens if the crop fails, or there's a flood or tornado or some kind of a disaster and they don't get a crop?
The farmer has insurance for that usually. The government actually helps to subsidize that insurance for the farmers so that if there is a natural disaster, they've got that insurance to call on. And in addition to that, often there will be government payments in that area to help those farmers that may have had a bad year.
So even in a bad year, you're not having defaults because the insurance company is making up the difference. Is that right?
That's the idea.
Are there other players in this field if people want to get into buying farmland in addition to AcreTrader?
There are a few other players out there. We're excited to see the growth in the industry, and the more people out educating the general public about farmland, the better, in our opinion. We're just excited to help bring this asset class out to the public.
And how do you actually pick a property? You don't take everything that's coming at you. How do you pick what you do take and what you don't take?
I'd say this is our largest differentiating factor is we have an incredible amount of uncommon expertise on our farm. On our team. So hundreds of millions of dollars of farmland management expertise on our team, and billions of dollars in transaction experience on our team. We have an incredibly rigorous diligence process. So every week we're looking at or speaking to 100, 200 farmers and farm owners. And looking at that many farms. And then we have a formalized 3-stage diligence process we take those farms through. I would say far, far less than 1% of the farms we look at actually make it through that process and onto the website.
Wow. So what is the difference between one that makes it and one that doesn't?
A lot, but if I boil it down to some easy bullet points, soil, water and valuation are the three things we're focused on. You've got to have great soil so we can be crop agnostic. You can change what you're growing on that farm if the farmer needs to. You've got to have long-term access to water and ability to also get water off the farm if you have too much, and a good financial profile. And that's the 3 bullet points. There's about 100 behind that, but that's really what we're looking for at the end of the day.
Why do farmers want to sell to you if they've got a successful farm?
There's all kinds of reasons people sell. Again, it's a $3 trillion asset class, so $50 to $100 billion of farmland trades hands every year. There's tons of reasons you'd sell your home, and the same thing is true in farmland. What's important is that we're not always buying from farmers. We're often buying from other absentee owners. So about 40% of U.S. farmland is absentee owned, meaning that we're not reinventing the wheel or have a new program with rent. This is highly common, and most farmers are already engaged in rental relationships with a landlord. And again, it's very traditional landlord-tenant relationship where they pay a rent check. Unlike commercial real estate, though, we're not out fixing toilets in the middle of the night or chasing monthly rents or issues like that you may see pop up there.
But you do want to see that they've had a successful track record of managing the farm and having crops and being financially responsible and so on, right?
We do, and in working, I mentioned 100 points, give or take, that we look at in the diligence. A lot of those are around the tenant, in working with the tenant, making sure we have a good farm partner, and that we can grow with them, and also making sure we have a good tenant pool in the area, so that if our tenant retires or decides not to farm that land, we're able to find a backup tenant very quickly.
Does that sometimes happen that somebody dies and the child doesn't want to take over? You have to then, because you own the land at that point, you have to go find somebody else to farm the land. Is that right?
That's right. We're managing the land, and so for the investors, the idea is they don't have to think about these things. It's a truly passive investment. We take care of all of the back end from management, administration, paperwork, all that kind of fun stuff. The investor doesn't have to deal with. We're out there on the front lines dealing with that every day.
What is the taxability? The monthly distributions would be taxable, and when they sell the land eventually, that would be a capital gain? You
got it. Just like owning a stock.
So you give people a 1099 at the end of each year on the rental income?
Because it's treated as a partnership, so we actually issue a K-1 to the investors. Though again, with farmland, it's so simple. You have revenue, which is rent for the landlord anyway. Rent revenue minus insurance and taxes and a management fee, give or take, equals your net profit. So we're able to. The P&L is very easy to put together, and we get out K-1s very quickly. This year, for example, we had all of our K-1s out to investors in February.
That's very early. Most people are much, much later than that. What kind of fees are you charging on both sides, on the farmer side and on the investor side?
We make money a couple ways, and it's very simple. We have a management fee, so we charge 0.75% to 1% annually to manage the asset for the investors. And then we have a real estate company. And so it's rather unique in that we're not taking commissions or security sale commissions, things like that. We are simply partaking in the real estate transaction fee that would be there anyway. And so the brokerage fee, if you will, on the buying and the selling of the farmland.
Very good. We're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest for this half hour is Carter Malloy. He is the founder and CEO of AcreTrader, which, as you can see, is a way for the average investor to put money into farmland and get income from it, potential capital gains. You can find out more about him at his website, AcreTrader.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Carter Malloy. He's the founder and CEO of AcreTrader, which helps you invest in farmland, and you can find out more at AcreTrader.com. Welcome back to the show, Carter.
Thanks.
You were saying something about Masterclass by Advertiser.
Yeah, it was cool to hear that. I'm a big fan personally, and there's a negotiation class in there from Chris Voss, who I've actually had our farmland acquisition team listen to about negotiations to help bring some of those skills into the real estate transactions that we're often engaged in.
Very good. So let's talk a little bit about the returns that people have earned long-term from farmland. How does it compare to stocks, bonds, gold, and cash, basically, the big other assets?
Sure, and we've got a bunch of this information on our website, so you can go and interactively play with some of this data. But this is what's really fascinating is, look at it versus a bond. It's returned almost twice what bonds have for the last 20 or 30 years. And that's because you're getting a coupon, just like you would with a bond, but you also have an underlying asset, which is this hard asset of land, hard and limited asset. And that asset has appreciated over time. So it's put up much better returns than bonds. Similarly, if you look at it versus gold, same thing, much better returns and giving you a lot of the same inflation protection and sort of bug out, weird market time protection that gold provides. Versus other things like stocks and real estate, it also performs in line or a little better, but with a far decreased volatility profile. So you don't have, in a single year in the S&P, you can lose 30 or 40%. We just haven't ever seen that or anything close to that in the world of farmland. So you still have these big price swings up and down that you have to endure like you do with most other asset classes.
There have been downturns in farm values, though, right? I mean, I remember Farm Aid and all these farmers were going under left and right. Farmland doesn't always go up.
That's right. There are downturns. The most recent in the last 20 or so years we could point to would be Nebraska, where they had a huge run-up in values through 2014. And then for 5 years after that, it was in a bear market. And due to a number of factors, and part of the reasons why you haven't seen any offerings on the AcreTrader site in Nebraska yet. But what's fascinating there is that in that bear market, the price of land over that 5-year period went down something like 17% on average. But the investor end to end still made money nominally because you were getting the cash distributions every year. So again, it's nothing's foolproof, nothing's guaranteed in life. But what we love about farmland is that it's just really boring. It isn't sexy. We use it to grow our food. I think if that type of portfolio, look no further than Warren Buffett as an example. He owns insurance companies and banks and distribution and even farmland. And that's what we're looking for is reliable, consistent, and long-term passive income. And with farmland, no matter what, we all have to eat. And so you always have this great backstop with the asset.
So lately, we've been seeing that farmers have lost the market. You're seeing farmers plow under their entire crops because they can't get them to market. Dairy farmers are spilling all the milk because even though it's perfectly good, restaurants have closed and colleges and all the places they were selling these food items have closed while there's huge lines at food banks. I mean, there's this massive kind of disruption in the food supply right now. If that were to continue longer term, would that impact the value of farmland?
It could. Dairy has been a bad place for a long time. And frankly, farmland and commodity prices, again, like we were discussing earlier, commodity prices have been low for 5 years now. So it's a tough time. Farmers have to work through tough market cycles, and all of them have endured major ups and downs in their businesses over time. But they're an incredibly tenacious, hardworking group, and at the end of the day, that farmland is still productive. It does still have output, and here in recent times, with the current situation, we do see some government help for those farmers to help keep them afloat and keep business going as usual.
So what happened, for example, during the trade war with China? It's been resolved now, but China was not buying our corn and soybeans and wheat and so on because of the trade embargoes both directions. Did that impact the value of farmland and their distributions?
It did not impact that we can see. There's been no real discernible impact. There hasn't been a lot of favorable farmland value growth in the last couple of years. Again, if you're acquiring 1 in 100 properties, you would expect to do above market. But looking at the market averages, it has not been anything to write home about in terms of the values. The rents have still been there. The farmers continue to work, they continue to grow, and yeah, the trade wars did hold back what seems like would have been otherwise an improvement in commodity prices, because there is an obvious, very long-term secular tailwind to commodity prices, and that we need more of them. We have to eat more. There's a growing middle class, and more and more people around the world are eating meat, which requires lots of farm products, and so there is a very strong long-term case to be made for investing in farmland.
Have there been other major investors who invested in U.S. farmland? I think in the past, Kuwait and Saudi Arabia and Japan were buying up our farmland, and there was all kinds of concern about that. Is that still happening?
We don't see that much in terms of foreign ownership. We just don't see a lot of that happening. We do see a lot of growth in private equity. So there's about $30 billion of private equity money in farmland today. That's still like 1% of the asset class, so tiny on a relative basis. But that $30 billion is up from $3 billion 10 years ago. So there's very rapid growth as institutional investors have latched on and recognized the potential for farmland. So a lot of growth on that side, and then you have seen lots of family offices acquiring farmland. Everything from the Gates Foundation to some large churches and endowments. Because again, I think they come at it as this is a really great long-term investment. And I think the Buffett quote is, "I'd rather own all the farmland in the United States than all the gold in the entire world." And we tend to believe in that.
So the kind of parcels you're buying tend to be in rising markets. I mean, you say you were avoiding Nebraska because it was having a downturn. Is that right? You're basically buying into appreciating markets?
Yeah, I want to be careful there. We try not to play trends and go for the hot market. Again, it boils down to soil, water, and valuation. So we've got to feel good that we're acquiring the farm at a good or great price in a good or great market. And so we do avoid problematic markets, but we're fairly agnostic towards geography and crop type, as long as we can get diversification by continuing to acquire high-quality pieces, which do, over time, there are studies that show that the high-quality farmland tends to appreciate at a rate faster than the lower-quality stuff.
What is the appropriate kind of investor to invest in AcreTrader? What are the kind of people you're looking for who would understand and appreciate what you're bringing?
I think anyone that seeks portfolio diversification and anyone that's interested in risk-adjusted returns, it makes a lot of sense. And again, we're not out here arguing to replace your whole portfolio with farmland. We're not saying this is a get-rich-quick scheme. What we are saying is this asset has put up some really fascinating returns for a very long time. And that's what we're after, is that portfolio diversification and that compounding of capital.
You say that you don't use leverage. So that means that you're buying all these pieces of farmland with cash only. You don't borrow anything. Is that correct?
That is usually the case. And in some instances, like when we're dealing with permanent crops and we have trees, we may use some debt there. But even in that part of the world, the loan-to-value ranges typically max out at 50 or 60%. So it is a relatively unlevered asset class. And that 12%, 11 or 12% average here for the last 30 years compounded, that is without leverage.
Would you buy farmland outside the U.S., around the world?
There are some really interesting places around the world. There's such a great opportunity here, though, and we have the best title laws in the world. That's the most fascinating thing about it. We've looked quite a bit, Central America, South America, and Ukraine is opening up laws over the coming 3 years to allow foreign investors. And so there are some great opportunities out there, but you have to tread very, very carefully when you're dealing with unknown laws and structures in foreign governments.
Very good. We have about 2 minutes left. Why don't you just kind of sum up why somebody should be interested in buying some farmland through AcreTrader?
Yeah, I think to boil it down, United States farmland has attractive historical returns, almost 11 or 12% on average, roughly, with low volatility and no real correlation to the stock market, for example. On AcreTrader, you can invest in just minutes. So in under 5 minutes, you can go on and start buying farmland. And at the core of our company is a team with very uncommon expertise, a unique set of about 20 of us or so, and growing quickly, that have just incredible histories in agriculture and in investing, bringing this to market.
Very good. Well, thanks so much. My guest for this half hour has been Carter Malloy. He is the founder and CEO of AcreTrader. As you can see, they help people invest in farmland, both for income and for appreciation. You can find out more about what he does at acretrader.com. Thanks so much for being on the show, Carter.
Thank you.
Thank you, and we'll be back after this with another section of the Money Answer Show.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan. Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest for the second half an hour of the show is Gary Boomershine. He founded realestateinvestor.com and helps people invest in real estate. Welcome to the Money Answer Show, Gary.
It's great to be here, Jordan. Been looking forward to this.
Tell us your story a little bit on how you got involved in real estate and ultimately creating realestateinvestor.com.
Yeah, for sure. I actually grew up in an entrepreneurial family. I've been in real estate most of my life. I just turned 51, and I live in the San Francisco Bay Area, and we had a real estate brokerage. So I was a licensed agent when I turned 18, literally 3 weeks after turning 18. All of us kids were part of the family business and actually paid for college that way. I actually decided that I wanted to, Silicon Valley was really up and coming, the whole boom of the internet. So I have a computer engineering degree from UC Davis and got recruited. I did 4 very successful startup technology companies, one that went public, one that got bought by IBM. And it was really around 2004 where my wife and I, we had 2 little kids. And I mean, it was great. I was doing the Silicon Valley thing, mostly in consulting and then ultimately in enterprise sales. But I was never home. I think one year I had 180,000 miles on United Airlines. And even when I'd come home, the dogs would bark at me, not recognizing me. So my wife and I decided to make a change and got excited reading Rich Dad, Poor Dad, Robert Kiyosaki, one of my flights, and said, you know what? I want to go down and go back to what we know. And so my wife and I went took our nest egg and started full-time real estate investing in 2004, and I've been doing that ever since. I started a company because of kind of a combination of real estate investing, primarily single-family properties in California and now in 4 different markets. I combined my technology background and started realestateinvestor.com. And we are the largest marketer in the real estate niche for both agents and investors. And so as an example, we've done over 47 million pieces of direct mail for our clients. And so realestateinvestor.com is both a technology platform for deal flow, for finding properties, sellers and buyers, but also a phone team that actually, so if you're an investor or an agent, our team will do all the marketing and the qualifying and appointment setting so that our clients who are agents, are going on scheduled appointments for people that want to sell their properties. So it's been pretty cool. Been around a long time, and especially right now with what's going on in the market, we're very close to our group of clients. We have about 1,200 investors and agents all over the country.
So let's talk about that a little bit. What is the impact of the coronavirus and basically the shutting down of the economy? Lots of people losing their jobs. Most people think that's going to mean real estate prices are going to fall quite sharply, even though interest rates are very low. So what is the impact of the coronavirus pandemic on the real estate market as you see it?
Well, it's interesting. Typically it's kind of like Warren Buffett says, right? It's usually we've had a very hot market. Real estate has been a 7-year cycle for almost 100 years. This has gone on, we're kind of at year number 11. So this is the longest cycle. And it's been what we would call the euphoric cycle of real estate, where everybody's excited about real estate. A lot of us that have been doing this business a long time, we see this as a good thing, assuming the market, that eventually the lockdown changes. But a lot of us are predicting a drop in real estate prices to get back to what we would call normalcy. We're actually thinking over the next 18 months that we would see a drop, probably more impactful in the coastal areas. We have no crystal ball. However, history is a great tell to the future, right? And if we look at the last cycles and kind of what we're seeing today, we would anticipate about a 20% drop on average, especially in the coastal areas. We're definitely seeing a lot of landlords right now who have that are starting to panic sell and start to think about, okay, I'm not getting rents, my rental income is not what I expected, and so they're starting to loosen up and we're seeing definitely a lot of that where 3 or 4 months ago, 5 months ago, a lot of these sellers were not talking, and a lot of them were actually starting to talk because they're considering to sell. They're getting definitely impacted. And my business on the realestateinvestor.com side is mostly single family. We're servicing a lot of people that are real full-time, not the passive investors, but more of the active investors and agents around the country. So it's going to be interesting. We do see some people that are just completely shut down right now. There's a lot of concern. A lot of people are glued to their TVs, right? And the fear that is, for whatever we want to call it, there's a lot of fear and a lot of panic. But we definitely, our clients, and a lot of them are basically saying, hey, this is a good time to button up the hatches in our own business, plan accordingly for this new market. And, whatever we do today, the pipeline really is built for 3 to 4 months down the road. Yeah. So
you would say that there's going to be a lot of motivated sellers today, both individuals owning their own homes and landlords not getting the rent. How does that impact the valuation of what investors are willing to pay for things if you have a lot of motivated sellers?
Well, we're definitely already starting to see that. We're already seeing that people are dropping, changing their criteria, being a little bit, or definitely adjusting. What there's a kind of a trend in the real estate niche called the iBuyers. The iBuyers are like Zillow, Open Door, OfferPad. We're seeing a lot. There was about $3 trillion available to sellers for buying properties. We've seen that pretty much disappear or on hold right now. So that money was not available. We're also seeing that a lot of what are called the non-qualified mortgage lenders, there were a lot of lenders, a lot of money available to investors, and we're seeing that dried up. So a lot of the full-time investors are definitely we're seeing that they're having to change their criteria depending upon where they are in the country. And I'll just tell you, like the center of the country, there were a lot more buy and hold investors. We're not really seeing a lot of change there. We're seeing on the coastal areas where there were a lot more of these rehabbers, people that would actually buy a property, fix it up and improve it and do the value add and then sell it. We're seeing that criteria is definitely starting to drop. So where they were, where they would determine, they'd be willing to pay a higher price. They're now backing off quite a bit, thinking that there's going to be longer inventory holds, a little harder to sell, price drops, et cetera.
You're seeing all these TV shows, H&G, all that, fix and flip. It's going to, easy way to make quick money. Is that going to be much less true than it has been in the past?
Well, that's a great question, Jordan. I think that just like historic changes in the market, I think that we're going to definitely see sort of a reboot where real estate is not as popular. But that creates massive opportunity. A lot of us that have been around for multiple cycles, we know that there's a fairly substantial amount of money to be made at the beginning of the cycle. Back to what I said earlier, Warren Buffett says, you want to buy low, sell high, and typically when you're buying is when other people are panicking. And so we're anticipating a lot of that. What I'm looking at in terms of my own business and the dialogue that I'm having with a lot of our clients is that we're going to see a drop for probably the next 18 months in real estate. We think, again, none of us have a crystal ball, but planning for a decrease over the next 18 months and then a fairly substantial appreciation increase, probably more because of inflation than anything else that we've seen, in past historical times, even like looking at 2008, 2009, when they start printing a massive amount of money, we have inflation, the dollar is valued less, however, real estate goes up substantially. And so I think that with what we're seeing right now, starting in about 18 months, we could see a pretty substantial increase again in the value. And very similar to other cycles.
Yeah. Tell us about some of the services that you're offering to real estate investors that they may come to you after they've tried to do it on their own.
Yeah. So, real estate, it's typically the hardest part is actually finding the deal flow of sellers and buyers, primarily sellers who are ready to sell their property. So it's a very classic marketing and sales approach. And a lot of individual agents and investors typically would have to do it on their own. They'd have to figure out, how to market and what are the properties that they're going to target and then do the marketing, which might be direct mail, maybe sending people out to visit the property. Historically, people may have hired resources to do that, and they can come to us instead of doing everything on their own. they can actually come to us at a fraction of the cost, and we can have them turned up in literally hours, and within 5 to 7 days we can put them in front of qualified, motivated sellers that are ready, willing, and able to sell. And so I've got a team that actually will manage the marketing. We've got software products that actually handle that kind of deal flow and the automation around it. And then I have an experienced team, a very professional team that will interact with the sellers and find out, how many bedrooms and bathrooms and, what is their time frame for selling, so that our clients can turn around and give them what we would consider an instant offer for the property.
Yeah. So what kind of returns do people expect to get once they're in your system? Are they doing it for income, from the rental income, or are they looking for appreciation? What is the kind of returns people should expect?
That's a great question. And we've got the gamut, I would just say, across the board. So we have a lot of, I would say, over the last couple of years, it's primarily been the flippers, the people that are actually buying, fixing, and then reselling those properties. I would say probably of the investors, I would probably say 60 to 70%, and then 30% are the buy and hold, those that are actually buying rental properties. We're definitely starting to see a shift. We're seeing a shift right now. The people that are coming to us are preparing to do more of a buy and hold.
Yeah.
And then on the agent side, that's part of our business that's really grown over the last 2 years. The real estate agents a lot of them have realized that they're going to be competing with the iBuyer, the Zillows and the Open Doors, and so they'll come to us. And a lot of those agents, we've got a couple of the top performers for Keller Williams as an example. In fact, he was the number one agent team for Berkshire Hathaway. He's now with Keller Williams, and so they see us as the advantage, the competitive advantage, to be able to compete with the iBuyer networks. Yes. So they'll come to us, and so they're not only listing properties, but they're also giving an instant offer to buy the property from the seller. And so that's a pretty sizable market, and we think that that's going to continue as well for us.
Okay, we're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest for this half hour is Gary Boomershine. He is the founder of realestateinvestor.com. He helps real estate people both buy and sell real estate. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Gary Boomershine. He is the founder of realestateinvestor.com. Welcome back to the show, Gary.
Great to be here.
What kind of training do you give to people who might not have had experience in real estate to get into an area that's kind of new for them?
Yeah, the two areas, we've got a full training platform specifically around managing the marketing and the deal flow for at the end of the day, a lot of our clients are not super technical. They're real estate professionals, right? They're really good talking to sellers and closing great deals. And so we'll provide the training to get somebody up and running. We have a software platform, very similar to kind of like a Salesforce.com, very specific. It's called a CRM, where all the leads come into, and then we do automation and automatic automation. So as leads come in, we're processing to figure out, okay, these need to actually go over to the phone team for an immediate call and have a dialogue with the seller, et cetera. So the training it's a couple of hours of training. People can come during the week. We've got live interaction, so people can come and ask questions. More importantly, we've got what we have found is that a lot of our clients typically will need a little bit more coaching around sort of the lead management, because a lot of it is interacting with sellers, and it's a classic marketing and sales funnel. And so we've got coaching training platforms, what we call REI and Vault, or reinvent, that actually will coach people. So we'll have an agent team as an example, and they may have 4 salespeople, 4 real estate agents on the team. and then we can actually hold them accountable and make sure that they're kind of tracking and achieving their numbers accordingly. So that actually came out of kind of a necessity. A couple of years ago, we had a number of our members our clients that asked us for additional coaching and accountability and performance coaching. And so that's become a fairly kind of interesting offer for us.
Who is the right kind of person to take on real estate investing like this, and who is the wrong kind of person who is not going to do well at this?
Yeah. Our clients have been really those that are more active investors. So there's passive real estate investors. Those are people typically more classic, what we would consider a real estate investor, which is somebody that has money, they're buying a property, and then they're holding it for the long haul. Very passive. Our clients are more active. They're more business operators. Somebody that is buying, 1 to 5 to 50 houses a month, and they may be fixing them up with a professional team. They may be flipping them. So in our market, in our world, they would call those wholesalers or rehabbers or people that are doing fix and flip. Usually they have a team with them. And so, usually they're looking for, a consistent flow of deals. And that's really, those are really the clients that we've served. Or real estate agents that are looking for listings and potential deals that they'll buy. So hopefully that answers your question.
If a seller has already listed their home with a real estate agent, can they go to you and try to sell their home through your network as well?
No, not currently. We're really behind the scenes for the investor. So it's really providing the staff and the software capabilities to provide the lead flow. So we wouldn't be, where you could go and put an offer and get an instant offer from us. There's other companies that would do that. Ours is more of a platform for finding sellers, for finding buyers for the investor, for the agent.
I'm saying, say you've listed your house with an agent for a while and they haven't been making any progress and doesn't look like they're going to be selling it. Can you go and offer your house over your network and say, this agent's not working for me?
No, that wouldn't be a really good fit for us. So it would be more. Let's say a real estate investor would say, look, I'm looking to buy 3 properties a month, and I'm looking for this particular market or this particular set of zip codes. And we could come in very quickly and say, hey, we would anticipate that your cost per deal would be this dollar amount, and then we'll do it for them. And so our team would actually plan out the marketing. Our team would plan out the whole execution strategy very quickly, and then do it for them. So it's really around the clients, right? At the end of the day, if you're in any business, you need customers. You need people that come through the door. So we're really the ones that are generating that flow for people, either sellers or buyers. We have a lot of clients that are looking for buyers, right? Especially as we're changing into this new market, and they're looking for buyers in a particular market that's looking for, to be able to buy properties, either to buy and hold or, buy and flip. And so we actually will put together, we go in and say, okay, here's the number of buyers, here's how we would do the marketing. We'll do all the phone work and interview those particular sellers or buyers. And then, the output is a scheduled appointment. Somebody Yep.
So it's amazing right now that you have incredibly low interest rates and mortgage rates, and yet it looks like the housing market's going to be falling. What is the interplay between interest rates and house prices?
Well, I don't actually see a real direct connection with that. It's really inventory. We were just looking at the inventory on the weeks of March 21st and March 28th. And from last year, in those 2 weeks, there was a 13.1% drop and a 34% drop. So we're seeing that. We're also seeing the home sales are declining. There's a lot less listings, so a lot less inventory. People are holding off. So we're not seeing a direct impact in terms of the low interest rates at all. And by the way, it's very similar to what we saw in 2008, 2009. So I'm not really anticipating. It's more of a supply-demand issue, right? There's going to be a lot less properties on the market. We're seeing there was $3 trillion in institutional investors through this iBuyer platform or platforms, and we're not seeing that money available to sellers. Yep. So I don't personally, and through all the analysis that we've done, we don't see any direct correlation at all. The other thing we look at is loan applications, right? And new loan applications were down 24% from last year, while the refi applications were up 168% from a year ago. So, that's the type of data. We haven't seen any interest rate correlation at all.
In about a minute or so we have left, just kind of summarize why somebody should work with you at realestateinvestor.com to improve their real estate transactions.
Yeah, it's really down to if you're a real estate professional and you're looking for more deal flow and more sellers and more buyers, and you're not experts at doing that, we're a great platform. We do it faster, cheaper, and better than anybody else. So somebody could actually hire a team, try to do it on their own, and it could take them 6 months or 12 months, or they could come to us as experts who have more expertise in this area than anybody else, and we can have that up and running for them in less than a week.
Very good. Well, thanks so much. My guest this half hour has been Gary Boomershine. He runs the realestateinvestor.com website as a way for you to find out about buying and selling and all kinds of transactions in real estate. Thanks so much for being a great guest on the Money Answer Show, Gary.
Thanks, Jordan, and everybody.
Thanks again. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.